Hi. The next issue that we need to deal with in the chapter of admission of partner is treatment of reserves, accumulated profits and losses, and also fictitious assets. So we will devote this entire section for treatment of these reserves and accumulated profits and losses. Now, in this introductory video, we will understand the meaning of the term general reserve, meaning of the term specific reserve, meaning of accumulated profits and losses, and how to distinguish whether it's an accumulated profit or an accumulated loss, and finally, what the meaning of fictitious asset is. So let's go into that. We'll begin with general reserve. General reserve refers to amount which is set aside from profits in order to meet future uncertainties, prospective losses, or to strengthen the financial position of the business. So it's an amount which is set aside out of profits but not to meet any specific liability. It's in general set aside to meet future uncertainties, prospective losses, or to just strengthen the financial position of the business. Let's go into what is specific reserve and see the examples of specific reserve. Now, specific reserve is also the amount which is set aside out of profits. But this amount is set aside out of profits for specific purpose. It could be meeting the claims of workmen in a factory who are involved in an accident, and a reserve for this purpose is referred to as workmen compensation reserve. And it could be for purpose of any fall in market value of the investment, and a reserve for this purpose is referred to as investment fluctuation reserve. So a specific reserve refers to amount which is set aside of profits but to meet specific purposes, and examples of such specific reserves will be workmen's compensation reserve and investment fluctuation reserve. Next, we'll understand what is accumulated profits and losses. Now, accumulated profits and losses refer to profits or losses that have not yet been transferred to the partner's capital accounts in case of fluctuating capital method, or to partner's current accounts in the case of fixed capital method. So ultimately, in a partnership firm, the profits or losses will be transferred to the partner's capital accounts in the case of fluctuating capital method and partner's current account in the case of fixed capital method. But where there is a P&L balance in the balance sheet, it refers to either a profit or loss that has not yet been transferred to the partner's capital or current account. Now, how do we find out whether it's an accumulated profit or whether it is an accumulated loss? So let's go into that. Is it an accumulated profit or is it an accumulated loss? Profit and loss account itself is a nominal account going by the rule debit all expenses and losses and credit all incomes and gains. So by this rule, any P&L account having a credit balance will be a profit, and any profit and loss account with a debit balance will be a loss. A profit and loss account with a credit balance will appear in the liability side of the balance sheet. Why? Because all liabilities have credit balance. So when there is a P&L balance appearing in the liability side of the balance sheet, we can infer that that is an accumulated profit. Now the reverse applies for an accumulated loss. A profit and loss account which has a debit balance as per the rule refers to accumulated loss. Now such a profit and loss account balance will appear in the asset side of the balance sheet since all assets have debit balance. So in a balance sheet, all liabilities have credit balance and all assets have debit balance. So a P&L balance appearing on the liability side will have a credit balance and therefore it's an accumulated profit, whereas a P&L account appearing on the asset side will have a debit balance and therefore it is an accumulated loss. And finally, let's understand what a fictitious asset is. Now the example of fictitious asset which you will often see in this chapter of partnership accounts is deferred revenue expenditure. Now this expenditure is a revenue expenditure. However, its benefit will last for more than one accounting period. This does not bring any asset into existence, but since it's a revenue expenditure whose benefit will last for more than one accounting period, the amount of the revenue expenditure which has not yet been charged to P&L account will appear as an asset in the balance sheet. It is not really an asset and that is why it's referred to as fictitious asset. So the example for fictitious asset which we will often see in partnership accounts is for deferred revenue expenditure or advertisement suspense. So now in this introductory video, we learnt what general reserve means, what specific reserve means, what is the meaning of an accumulated profit and an accumulated loss, and how to distinguish between the two, and also the meaning of fictitious asset. In the upcoming video, we will see the two methods which have to be used while treating reserves, accumulated profits and losses and fictitious assets,